Okay, MMTs, we're happy to announce that we are selling off in the broader markets and that the options expiration is printing more to the put side in the first hour. On this Google 3-minute chart, this was a put side trade. The puts were marked down yesterday. The calls were marked up. And as we're trying to get the markdowns at wholesale entries on the weekly Friday expiration, we have exactly 62 minutes in price action print. And we can see that the pullback side in this first hourly opening bell was just as yesterday's nice breakout side up to these highs. This is the opening left elbow, but we did make another higher high. And now we're back at the first level. There are different levels of breakouts from yesterday's lows. And we could still come down to this teeny here. This is the hour. We got 4 minutes into the new half an hour print. And the thing about it is you can clearly see that the Dow is down 169, the NASI is down 40, that NASDAQ 100 is down 33, but look at that S&P reversal back to the 1240.92 handle, down 20 handles. So you're minus 1.6%. So obviously something in the first hour of the tape on this options weekly expiration is that this European still a deal, is what's caused equities to come back and get marked down again. They were marked up yesterday, and we can clearly see from that 3-minute chart where that low of 592.43, and we talked about yesterday when we were breaking through the highs to get up to 598.50 that was going to be a key level that we had to get through yesterday, and we're finally making that market right now. And anything above the 592.50 ratio penny wise, like a dollar here from there, that's strong. Now it depends. At the very bottom here is where they're done selling that bid down, and they can't sell down that bid anymore. And how do we know that? Well, we're going to know that in that ratio right now is that when we put that last low in, we printed 0.37, and we're still weak. Because yes, it's 0.37, now it's 0.31, and that's the dollar amount. So it's always buying down here. Now, relative to that on the chart, you can see where we hit 380s on the low, and we're out here at 260 to buy. And we're not buying at the highs, and we're not in overnight risk. They marked these down. We took these down to 55 pennies. They were at 75. We're still going to watch how strong we move off these bottoms. And this is the first hourly update on the 585 call that got down to 810. That was at $13 on the high. And we had opening bids, and they bounced. We have that first live video on the opening bell, and we remain below at $6.70 because we're removing the risk. The risk is that when it did shoot to 13, no one got out of that, and that put side went from 295 to 732 on that 600. When that fell back $6 down, they marked up the put side. Yesterday they marked these things down, and they did, and they marked this up, kind of like the $600 call, but just the opposite. And we can clearly see that today the contagion and the fear is where they mark these things down. And the thing about it is having those lower wholesale entries reduces the ultimate dollar cost capital risk. This is the Google trade on the opening bell, and we remain below the market at wholesale bids. Once again, equities remain weak in the first hourly tape as they are, and the put side is working because the ratios continue to contract.